The housing market in Maryland has seen a lot of instability in recent weeks, and this has led to confusion for consumers in the local market. From interest rate swings all over the place from one day to the next, to inventory increasing over 30% compared to this time last year. It's no wonder that people are uncertain in the market and don't know how to navigate what's going on right now. While home prices are holding steady here in Maryland, buyer behavior has shifted dramatically. Hi, I'm Realtor Rebecca Burd. I'm a local real estate agent and I help people just like you from all over the country relocate to Maryland. If you're thinking of buying or selling a home right now in Maryland, it is crucial for you to understand what's going on in the industry aside from statistics and the national headlines. So what exactly is going on in the real estate market in Maryland, and what do you need to know if you're looking to buy or sell? One of the biggest drivers in the real estate industry right now is economic uncertainty. And much of this is related to the tariff policies that have sent the real estate market, along with other financial sectors of the economy, into somewhat of a tailspin. This has caused mortgage interest rates to fluctuate dramatically from day to day, which impacts a buyer's housing affordability directly in relation to their mortgage payment. Some buyers who were shopping for homes with a mortgage pre-approval based on a current interest rate for their mortgage found their actual mortgage payments to be much higher when it came time to lock into an interest rate once they were under contract to buy a home. If it's been a while since you purchased a home using a mortgage, you may not realize that you're not actually locked into a mortgage interest rate when you receive a pre-approval from your lender. The rate, in fact, is an estimate based on what the current interest rates have been, and you don't have a final mortgage rate locked in until you're under contract to buy a house with a specific property. Once your offer has been fully negotiated and signed by all parties, including the seller, the buyer is then making formal loan application to purchase the property, and only at that time can a lender lock in the interest rate for the buyer. When mortgage rates shift 1/4 to 0.5% higher, this can be a significant impact on a proposed mortgage payment if a buyer's been budgeting, especially if they're shopping at the top of their price point and affordability. Sometimes a loan officer will advise a buyer to wait to lock in an interest rate even after they're formally under contract to buy a house if favorable market indicators show that the interest rates could be better in the next few days and it would be a better time to lock in then. Other times, your loan officer may encourage you to lock in an interest rate as soon as possible, especially when there's a lot of economic turmoil and volatility in the market. Once you've locked into an interest rate, that's usually the rate you've committed to. So when your loan officer says, "Are you ready to lock in your interest rate?" and you say yes, you're locked in. In some cases, a lender may be able to relock or float down an interest rate if the market rate happens to go down between the time you lock into your rate and go to closing. But there's a fee for this, and lending institutions will usually pass that fee on to the buyer. In some situations, rate fluctuations at a mortgage pre-approval stage can end up reducing the price range that someone has been shopping in, and in some cases, it may even price them out of the market altogether. Right now, interest rates are holding steady in the upper 6s and low 7% range. The significant mortgage rate drop that everyone was holding their breath for in 2024 never came to fruition. And once again, it continues to elude buyers into 2025. And while some buyers have been holding off to buy a home over the dream of reverting back to the days of 2, 3, even 4% mortgage rates, home prices have continued to rise, steadily increasing on the home that they could have purchased in the last market, and now it may be completely out of reach because mortgage rates haven't gone down and the cost of that house has continued to rise. Of course, we would all love to see mortgage interest rates in the 5s or even the low 6s for an extended period of time. But as we learned last year with the promise of low interest rates on the horizon that never came, no one knows what the future holds when it comes to mortgage rates. Two things for certain right now are this: mortgage rates have not come down significantly and neither have home prices. In fact, the Mid-Atlantic region reached another record high last week with a median home list price of $470,000, an 8% increase over this same time last year. This can be a huge frustration for buyers, especially those entering the market for the first time. When you're deciding if it's time to purchase a new home, it's important to factor in your current housing expense. whether it's paying rent or contributing to a collective household if you're living with family or roommates. Once you have that figure, compare it to what a housing payment would be with a proposed mortgage based on the current rates, and see if building equity for yourself makes more sense, or are you better off staying put until you're in a better financial position to buy a home. Also take into consideration other factors that include location where you live, quality of life, and family circumstances. But if you're sitting on the sidelines paying rent, waiting for interest rates to come down, you may end up paying more in the long run for that dream home as home prices continue to rise. Another uncertainty in the market right now is how the tariff policies are going to affect new construction. If you live anywhere in Central Maryland or Cecil County, you know there are a ton of new construction communities being built, and they can be a great option for home buyers wanting a brand new home with the latest technology. New construction is also a good option for some home buyers who need special financing incentives or closing cost assistance. I currently have 2 buyers under contract right now in new construction communities who are getting a brand new home with excellent financing terms and very little money out of pocket. Because interest rates are so high and there are fewer buyers right now, home builders are offering significant incentives to get buyers through the door. I've seen as much as $25,000 in closing cost assistance, 5.5% fixed interest rates on a 30-year loan, and price reductions on the home. However, home builders say the tariff policies may cost them thousands of dollars to build a new home, and you can expect those increases to most likely be passed down to home buyers. These changes won't affect new homes that are already under contract or nearing the end of completion, but as the new phases of construction are just now getting started, material cost increases are expected to drive the cost of those new homes up significantly. And if builders decide to cut back on building homes, this will directly affect the housing supply shortage that we're already experiencing here in Maryland, because this will end up driving up the cost of those resale homes that started the housing shortage in the first place. There's a great window of opportunity right now for home buyers to take advantage of new construction incentives, especially buyers needing closing cost assistance that they may not otherwise be able to get in the form of seller contribution in a competitive resale market. But these incentives may not last forever based on everything else that's going on in the economy and the tariff policies. Keep in mind when buying new construction, you're typically going to be on a smaller lot and in a planned community with the homeowners association. But you're also getting a brand new home with the latest technology and low maintenance with all of the warranties. It's important to note that not all builders are the same, and incentives can vary dramatically. In Maryland, you have the right to buyer agent representation when purchasing a new construction home, and it can make a huge difference in negotiations. If you're thinking about buying a new construction home, be sure to check out my video titled New Construction Homes in Maryland. On resale homes, the most important thing to understand in the market right now is that location and price point determine if it's a buyer's market or a seller's market. I know that sounds impossible, but bear with me for a minute and let me explain. Houses that are listed for sale in prime locations and in coveted school districts, especially those priced at the entry level or downsized price range, are very competitive right now, and we're seeing multiple offers that would constitute a seller's market. I've had clients recently competing in multiple offer situations and houses that were going under contract, sometimes $30,000 or more over list price within just a couple of days. These properties are typically located in the most popular school districts and locations in the counties. And they're ones that have been tastefully decorated with updated kitchens, new bathrooms, neutral colors throughout, and they see the most activity and competition. These conditions definitely warrant a seller's market, and they remind me of the days of 2 and 3% interest rates when there were lines out the door at every open house. Other locations throughout Central Maryland and Cecil County are hovering between 14 and 21 days on the market before a property goes under contract. In these instances, I've helped buyers negotiate price, closing cost assistance, and other seller concessions, and of course inspections and repair negotiations. This would be more reflective of a somewhat buyer's market. In fact, I've had several buyers just this year move into their new home with equity because the house appraised higher than the sales price that was negotiated when they went under contract. Purchasing a home below market value and moving in with equity that you'll continue to build over the years is a huge incentive for buyers, especially coming out of a frenzied seller's market a couple of years ago when buyers felt like they had to give up their firstborn just to get into a house they didn't really like that much in the first place. Another opportunity for buyers on resale homes right now is houses that have been on the market longer than the average because they're simply overpriced. Most buyers today won't bother looking at a house that's priced too high. And if a seller needs to sell, a price reduction is going to be imminent. There's an opening there to get in before the reduction, to negotiate directly with the seller, to get under contract on positive terms without competing with other buyers after the reduction. For the most part, buyers are more conscientious now than ever before. Considering the increase in home prices and the mortgage interest rate they're paying on a mortgage loan, they're looking for move-in ready properties and more value for their money. Proper marketing, presentation, and pricing all matter when it comes time to sell. If you're a seller in one of those prime locations, there's a bit more leeway because there's still going to be buyers that will likely come forward just to be in a specific neighborhood. But the days of listing any old house in subpar condition and expecting top dollar and multiple offers from buyers willing to waive contingencies and inspections have come and gone. Buyers do the majority of their home shopping online, and professional photos and high-quality video tours showcasing the home on multiple social media and online platforms will get the most qualified buyers through the door. Then the house needs to deliver when the buyers see it in person on a showing tour. This means skip the virtual staging and all the over-editing in those video tours. Another indicator we're watching is properties that have come back on the market after they've been under contract. This is also called back to active status in the multiple listing service. Now, this can happen for a variety of reasons. The most common is over inspections and repair negotiations. During the inspection contingency, if there is one, the buyer can cancel the contract without giving an explanation or providing the inspection report. It can also be an indication of a buyer that had cold feet after being under contract, or they saw things in the home during the 2-3 hour inspection that they didn't notice or they missed during the 15-30 minute showing tour before they put their offer in. Buyer expectations are higher now than they were in the past. And this can be reflected in the number of homes that are back on the market after being under contract. Houses also come back on the market if a buyer's financing falls through or if there are appraisal issues. We're seeing now that buyers are not willing to pay over market value, and if a house doesn't appraise at the sales price, either the seller lowers the price or the property comes back on the market. The bottom line is that it's still a tight housing market here in Maryland, but things are starting to balance. The days of buying a home and selling it a year later with a 30% profit are no longer a reality. We're returning to more of a balanced, normal market of the average 3 to 5% appreciation rate. This allows buyers to have more choices in the market and more sellers to still have a significant amount of equity, even if they bought their home just a few years ago. And while there's a lot of noise on the national level with the economy, the fundamentals of real estate remain the same. So, what do you think about the real estate market in Maryland? Have your plans to buy or sell changed? Let me know your thoughts in the comments. And if you're considering a move to Maryland or buying or selling a home, my contact information is in the description.